Welcome, everybody. Thank you for tuning in for another Indy Investor Pod. I have an amazing guest with me today. Really excited to jump in and just talk with her about the reasons that she chose Indy to invest in. I think she made a great choice because I love Indy and I love everything about it and stuff like that. But I have Sunitha Rao here with me today. So I'm looking forward to jumping into a conversation with her. This podcast is all about just educating investors on what is going on in Indy, the best things to invest in, how to invest, tips and tricks, just things like that. And that's why we kind of developed this show. So looking forward today with our interview with Sunitha. So on with the show. All right, and welcome back to another Indy Investor Pod. Like I said, I am very excited to have with me my guest today, have Sunitha here. How's it going, Sunitha?
Doing well. Thanks so much for having me.
Yeah, so excited. I know we've talked a couple times before and stuff like that, and you have an amazing story just in general on things, but one of my favorite things I think about talking to you and just kind of getting into knowing who you are and the kind of the way you process this whole thing is you're such an analytical person and you're a numbers person, which I appreciate as a person. You're an analytical person myself. So real quick, before we kind of nerd out on everything, kind of talk about the numbers and stuff, why don't you do just real quick, kind of give us just a little background about yourself, about kind of where you came from, what you were doing, and then kind of how you just got into why you wanted to get into investing really.
Okay, sure. So I currently live in Indianapolis. I moved here from Boston about a year ago. I have been investing in real estate about almost exactly 2 years now. And I'm currently on retirement plan number 3, real estate being retirement plan number 3. So my background is very, I think, a little bit different than what many people would expect. So retirement plan number 1 was in the professional athletics arena. I played tennis professionally for almost 10 years. I was an Olympic athlete. And while that was successful with like my overall track record, et cetera, it didn't leave me kind of with the monetary returns I was hoping for, because clearly I'm not living in Monaco right now, So after I retired from the tour at the ripe old age of 23, I decided I needed a stable paycheck and an education. And because in order to pursue that route, I had dropped out of school after 6th grade. And it was kind of like, I had to do some other things if I wanted to like actually be able to support myself meaningfully. And so wanted that stable paycheck, went back to school, got a bachelor's, got a good job, started in the corporate world. I'm still in the corporate world. That is my full-time job. I work in finance for a biopharma company. And while that has been that's been very rewarding and has provided like a good base for me to start investing, it was also very constricting, and I just after a life of, after so many years of being able to set my own schedule and have autonomy and like pursue my dreams in the way that I felt would allow me to live my best life, I just felt like I was wanting a little bit more than what the corporate world could offer. And I wanted to be able to influence my own financial future and hence the decisions I could make about how I would live my life to a greater degree. And so 2 years after I left undergrad, that's when all of that kind of started coming to my mind. And that's when I found real estate investing shortly thereafter. So spent a couple years studying because I was also in grad school at the time. So still didn't have any money to invest. And then about 2 years after I started like studying, I finally had saved up a little bit, started to invest. And that was in 2018. And so 2 years later, I'm here. I had started investing as a long distance investor because I was working on the East Coast. I lived out in Boston, and that's kind of like where our discussion kind of comes in, I guess. Like I did a pretty intense search covering a bunch of different cities in the US, trying to figure out where I would be able to invest, because like the Boston market and the fundamentals of that market just, I did not feel like would give me the best chance to succeed and the best chance to build the business and the life that I was looking to build.
Yeah, definitely understand that. I know my in-laws live out in, just south of Boston, and
yeah,
all out there. Yep. At a house right now, it's like, I can get you like 3 houses here for that. So
at least to get like a good house in like a decent school district, you're looking at well over $1 million in the Boston area. So that wasn't really the life that I wanted.
Right. So, and that's what I wanted to have you on here and just kind of dig into that a little bit of, so you're living, in Boston on the East Coast and stuff like that, and you decide to start investing in Indy. And then you're looking at the analytics behind it, looking at a bunch of different cities and things like that. So what ultimately kind of made you choose Indianapolis to start investing in? And then later on, we can kind of get into why you decided to move here and all that stuff and things. But let's just get
Sure.
into like kind of why you chose Indy over some of the other markets that are out there.
So there were a variety of factors. I don't believe on like relying on any one thing in any part of your life, and the decision to invest in Indy was no different, you know? So um, there was a host of factors, but there's also the concept of like self-awareness. I think taking the time to really understand what you are okay with as an investor is really important, because people are going to come at you saying, hey, you should look at days on house, like days on market. You should look at this statistic. You should look at that factor. But at the end of the day, you're putting your own money in. So like, what is the business model you are trying to build? What kind of life are you trying to build? And what factors do you need to look at that will support that? So like for me, two things. One thing was obviously like price to rent ratios, but that came into play much, much later on. But I was in this for the long haul. I knew I was going to keep my corporate job for a little while longer. And I knew that maybe like immediate cash flow was important, but I also wanted to get assets with value in good areas so that over time I never wanted to be in the ghetto, you know, because I felt like that would potentially projected cash flows would be higher, but at the same time it would just build like a riskier asset for me. I wanted an easier life, you know, whenever I retire. So like I was looking at things like school districts. I was looking at things like projected job growth. Like job growth right now is important, but what about like 3 years from now? What about 5 years from now? What about 10 years from now, when I actually quit my job and I want to rely 100% on this income that I've built? You know, like right now I can take a couple hits, but down the road it might be a little bit harder.
Right.
So I definitely looked at the statistics that would allow me to figure out which areas were, I think, the best for me to build the life that I wanted to build a few years from now.
Yeah. So then what kind of areas are you investing in, Indy? What areas did you choose to kind of dive into, and what made you feel comfortable with what you're looking at?
So I'm at 7 doors now. My first 5 doors. This is not a good diversification play, but I don't regret it at all. All my first 5 doors, all of which were purchased when I was still living in Boston. They're all up in Hamilton County. So I had found like several reports at the time that had named like Carmel and Fishers as like best place in America to live, you know, and these were like brand names like Money, Forbes, like big names that were highly touting these areas. And when I looked at these areas, it's really hard to cash flow. You know, it's great to be in a good area, but you still need to be making some money, right? So I actually ended up in Noblesville, and I'm very thankful that I did, because these like 2 years later now, it's really hard to find anything that's going to cash flow in Noblesville. So I'm really glad I got in at that time. And I ended up buying there. And then after I moved here, I would probably love to get a few more in Hamilton County, but the prices had changed. So now I have a single family that's like close to Southport, South Side, just outside the Loop. And I just closed on another door that's also South Side, like close to University Heights. So I'm starting to diversify a little bit into other parts of the city.
Yeah, that's great. And let's kind of talk about that a little bit. So your first 5 doors that you were still living in Massachusetts at the time and stuff like that. So let's kind of get into a little bit of just as an out-of-state investor, what's something that you maybe kind of some tips that you would recommend to somebody that is out of state and they are just starting to invest in Indianapolis?
Well, the biggest thing that I learned, and it was actually not on a trip to India, it was a trip to Kansas City, which is where I was initially going to invest, was to figure out where to find the crime maps. So like truly a crime maps turned into like my best friend, because I went out to Kansas City, not knowing about the crime maps, not knowing that you could even look at these things. And I'm looking at like this, I think it was a quadplex or something. The numbers were amazing and it looked like a great area. And I was like, why is this still on the market? You know? And then we walk out to the backyard and there are like slugs in the backyard. And I was like, ooh, maybe that's why. And like, if I'm trying to invest at a distance, I'm not going to be able to fly out to every property I buy and see if there are bullets in the back, you know, like that's just not something that I can do. So that was a really big tool for me as when I was a new investor. And after looking at like crime apps and stuff, I start to get a little bit uncomfortable, just because like parts of Indy used to be like very block by block. Sometimes some areas still are, you know, like there'll be like a brand new build with like like the rectangular kind of numbers next to the door that are like super fancy, you know, and then like a couple blocks over, there's some dilapidated homes, you know, and that doesn't mean that any of them are bad investments. It's just you have to know what you're getting into and have the right people to manage them. In my pursuit of wanting a more stable and I guess less volatile in terms of like cash flow, that kind of a life down the road, I wanted to start off in an area that didn't have as much of that risk. So when I went outside of the loop, like that was just a better fit for me. The projected cash flows were definitely lower. You're not going to find your duplexes for 50, 60 grand. But it just worked for me. I knew I was getting into a nice area. I knew for like the vast majority of the areas I was looking at up north, I'm not going to get into an area where there's like a lot of crime, et cetera, et cetera. Like the school district, some of the best in the area. Like I just felt like I was overall not going to make a huge mistake in terms of location, no matter where in that like pocket I invested in.
Yeah, definitely. I mean, that's how Indy, and I always describe it to people, is like, even started off, like, I was like, describing Indy and what I learned about it right away, I was like, it's like Swiss cheese. Like there could be like, really good pockets.
Yeah.
There's like one that's like, it's bad. And there's some places that are, block by block or even street by street and things. So
Yeah.
especially as an out-of-state investor, I think it's really important when you are developing your team and getting your boots on the ground here, of making sure you are comfortable with like what they're telling you, making sure you guys have the right lingo. If they're using the same wordage that they're using, is the same thing, that means the same thing in your head and stuff.
Yeah.
So when you were developing your team and kind of going about, kind of putting your boots on the ground over here, how did you go about that? Like, what are maybe some tips you have for people of like, did you come out here and visit with that? Or you just like, hey, Google search, like first person that came up, and they were like an all-star. I didn't work with Alicia, and she's awesome. So
also, yeah. Also, I think maybe it's a combination of both. I didn't come out here, but I did network a lot. And I did talk to a lot of people. And I think in general, I was looking for people who were hungry, and B, people who were conservative and were okay with kind of telling me no.
Yeah.
Because I don't always know, what's going on, and so like when I was talking to Alicia, she would say, maybe this isn't the fit for you, or I might look at like I would want something with a higher return if you're going to go into X area, which told me like if you're higher return, which is higher projected cash flows, which means there's probably more risk, which means I might want to stay away from that area right now. So it's also like kind of reading between the lines, but like making sure you have an honest and ethical team to support you and who truly understands what you were looking for, and I think there are also several iterations with that. When I first started working with my agent, I hadn't clearly communicated, like that onus was on me to tell him exactly what I wanted. So he was kind of sending me things like that a lot of his other investors look for, but that was not my business model, And so it's on the investor to kind of like train their people to understand what they're looking for, And so that comes down to education, and being very specific, understanding that B-class assets aren't the same for everyone. C-class assets aren't the same for everyone. Like what does that mean to you, and how do you communicate that to the people you're working with?
Yeah. And I think it's so important. You brought up so many great points right there. And I really just want to kind of touch on that one more time, of like, you first of all need to know for yourself of what you want, what you're comfortable with, kind of where your guidelines are, because your agent here, your property manager here, your wholesaler here, whoever it is, it's very easy to kind of like get very close to that line and kind of push the limits, like, oh, she'll go a little bit past this or whatever it may be, until you, especially you don't have that relationship built up or anything yet. But that's what I always tell people, like, it's really easy for me to sell you one house. I don't want to sell you one house. I want to sell you 10 houses, because I want to make sure you're what you're doing. That's the whole point. And when you're looking at a team, that's exactly what you need. You need people like that are, you speak the right lingo. They know exactly what you want, and you need to be pretty blunt about like, hey, this is what I want. These are my expectations. And then as your relationship grows, obviously those parameters might extend a little bit and stuff.
Yeah.
So let's get into a little bit of, so you decided to go ahead and just go, hey, I'm just going to jump in. I'm going to move to Indy.
Yeah, basically.
So now that you're living here and you're investing here too, have some of those parameters opened up for you of what you might invest in? I know you're.
Oh, definitely.
So let's talk about
definitely.
that.
So like,
sorry, go ahead.
Yeah, It's fine. So like as a long distance investor, my risk tolerance was much lower because I didn't know exactly what I was getting. And also as a new investor, forget long distance. It was long distance and new. I didn't I didn't really want to take on as much risk with, and when I say risk, I mean maybe like not in an A-class neighborhood, kind of asset, because I didn't know what I was getting into. Like I didn't know what was always going to be, not that I know what's always going to be happening now, but like when I'm in the area now I have a better idea of what the neighborhoods are like. Like after I've driven around and lived here for a year, I have a better sense of what's good without having to be Hamilton and what's like bad. Like if I can look at a picture on the MLS and have a better idea of what kind of neighborhood it is just by like kind of like the surroundings a little bit, so I'm definitely more open now to taking on, air quotations, a little bit more risk in terms of not having to invest in like the highest class asset, and maybe going into the areas that are more on the gentrification route and maybe haven't quite hit. And also because I'm no longer a new investor, I have faith in my team and my property manager to be able to manage the asset well, even if sometimes going into an area that's not quite as stabilized, like you might get some shady tenants, but now I know that like my property manager has my back and she'll take care of it for me. So like you can definitely kind of expand that risk tolerance as you get more experience and as you get more diversified. So like if in my first property I went for something that wasn't as I think in as stabilized of an area, like an eviction would hit me a lot more than it would now, because now I have 7 other doors to cover the hit of one potential off kind of month or one off asset. So yeah, it's definitely changed.
Yeah. So how are you? And I was kind of open this. I didn't prep you for this one or anything like that.
Oh, thanks. I specifically asked you.
So let's even talk about like how are you dealing with everything that's going on right now with, you have a couple of doors, and are they all just straight buy and holds, or do you have a couple Airbnbs as well?
Yes, I have one Airbnb and the other, so 7 doors, 5 are long-term rentals. One's brand new, so that's going to hit the market in the next couple of days. One is a short-term rental and one is a house hack I'm living in.
Yeah. So how are you dealing with everything that's kind of going on?
I don't really know. So actually it seems to be going okay for the most part, like knock on wood, fingers crossed, like of the places that have long-term tenants, like this is the first month, like I was kind of wondering what would happen, and all of my tenants have paid on time. Like they're good. So like, I'm very thankful for that. I think in general, a lot of short-term rental hosts are hurting right now. I've had a ton of cancellations, but I am so lucky in that I had one woman come in who wanted to visit family and then had to like speed up her travel to get here in time before like travel restrictions, et cetera, started to come in. So she's been there for about 2 weeks and change, and she's there for another 2 weeks. So like she's kind of there, and that's basically helped me ride out kind of what I hope will be the worst of it, in terms of like the COVID and like people not traveling. We'll see. But I think with the Airbnb, time will tell. It's a smaller unit, so holding costs are low, and I can charge a much lower rate and still get a decent guest. So I think after the stuff with the virus starts to die down, and depending what happens with the economy after, I'll have to judge. Like the economy and the virus are 2 kind of different dynamics. So I'm not ready to turn it back into a long-term rental just yet. Like I want to see what happens. So also because it doesn't make that much money as a long-term rental. It's like a 1-bedroom, 1-bathroom carriage house that's like $500 a month. It's not too much to beat as a short-term rental. So we'll see.
No, thanks. I appreciate you sharing that and stuff. Something else I wanted to kind of talk to you about today is that I know, so you're still working full time in your job, and really, I know the last time we talked, I was kind of picking your brain about this, so just like how you're sticking with that. You're going to use that to basically fund what you want to be doing. I see a lot of investors that kind of make that jump a little too quick, and I'm not to judge them. I'm just like, I just want to kind of say, hold on a little bit, make sure you know what you're doing and stuff. So I want to kind of give a little bit of time to talk about that, of like how important that is for you to make sure that you are secure. You want to make sure that you're working your full-time job, but you're using that, you're being smart about it, and you're using that to fund really what you want to be doing and what your passion really is.
So I think the answer to that is twofold. The first of which is like very personal. So like I didn't come from much. Like my parents are immigrants. Like we my family was on welfare when I was little, like we're on different social assistance programs. I know what it's like to not have much or like anything, as a teenager. There were definitely times like when I was on my own, like I left my parents' home when I was like 18, 19, I was supporting myself and I didn't know where I was going to sleep like the next night, sometimes like feeding myself was hard, so I know what it's like to not have any money. And I'm not about to go through that again. Like that is never happening, So yes, I love real estate. Real estate is this is what I want to do full time, but I am 100% not willing to put, like, I'll go big or go home. Obviously I moved out here. You know what I mean? I left my family behind, moved out here. But from a fiscal perspective, like I definitely, for me personally, that there's no way that I would jump into real estate full time unless like I had built a steady business that had fully vetted out my theories over time. Because honestly, a lot of us investors are operating on like theoretical knowledge. A lot of us have never been through a recession. A lot of us have never gone through anything. Well, most of us have never gone through anything that's happening anything like what's happening right now. So like, how do you know how things are going to shake out? I know that, fingers crossed, like I have my rental income, but like if that just completely blows up and like my tenants can't pay in 2 months, I still have a job that will cover my mortgages. Yeah. Like a lot has to go wrong right now in order for me to not grow that business model, and to support that business in its like infancy and its growth is like the most important thing. Also, there's the fact that like I'm much more easily bankable as a W-2 employee. So when I was getting into this, like another reason that I wanted to get into the higher value assets is because I felt like I want to be in an asset where people would want to live even during rough times. So when people in like Carmel or Fishers maybe needed to downgrade, they could come to Noblesville, like there would still be people wanting to live there. And I could still get loans when when the lending standards start to tighten up. There is a recession. There was a recession coming when I was thinking about this 2 years ago. It was all about how do I prep myself to be successful no matter what.
Yeah. So no, that's good stuff. I think it's so great. And just having, I always come back to when you're going through, nobody could ever predict anything like this. But kind of that like, hey, like you just said it too, of like a lot of stuff would have to go wrong for me to like kind of, lose everything. So that's good security to have, good and just mindset to kind of realize that. And so that's great. That's awesome. I do have a couple other questions. There's one other question for you, maybe then we can kind of wrap up here a little bit. But so, you started investing in Indy, you're up to 7 doors now. You're still looking to grow a little bit. I kind of want to ask you off those and maybe just go back to those first 5 doors that you did. Mm-hmm. What kind of grade would you give yourself off of like, hey, as a new investor, just starting off, even a, out of state investor, things like that. How well do you think you did with that and just that transition?
So I'm pretty proud of myself, actually. I think it's been going pretty well. I mean, when I think about these things, I think about what I could have done better. So the trade-off was that like a lot of these, they were conventionally financed, like with the exception of like one, which is seller financed, and they weren't cheap. So it took me out of the running for a little bit. Like, so I got those 5 doors year 1, and then year 2, I could only buy the house that I lived in. And now I'm starting into year 3, and it's still like a little bit slow as I try to get up that W-2 savings. I could have easily just saved up and like bought in cash and then refinanced out and then had more money long-term, but then I probably also wouldn't have these properties. And so I think that's like the one thing I struggle with, what I could have done better. But in terms of like the properties I chose and like the price points I bought at, like I'm stoked. Things have been like pretty easy. So one of the places that I got like was rented 25% under market. I didn't have the money to raise rents in the with the risk that the tenants would leave, to renovate and get it to full price. So I let them stay for another 6 months and then told them, hey, like it's time. Like you guys aren't like, I really need to raise the rent. And they ended up leaving. And this was like right before the school year started, and Noblesville, I bought there to cater to the families who had kids and stuff. And I was like, oh my God, I should have done this earlier. I wish I had the money earlier to do this. But after renovation, it went on the market 2 days before school started. And within 2 days, I had a family in there paying like what I was asking for, and then all my other units, with the exception of the short-term rental, like I haven't had vacancies in any of them. One was a 2-year lease, the other two renewed. Like, vacancy and turnover are some of our biggest killers, in this game. And I haven't really had to experience that because of the location that I purchased them and the price points, et cetera. So I'm pretty happy with the way things have gone so far.
Awesome. And I just kind of go back to kind of the moral. And this is the reason I wanted to have Sunitha on here, and just kind of all that. It's just like the preparation and just kind of the thought process, and kind of just kind of taking your time and looking at the numbers behind stuff and making sure you're comfortable with your decision. I think is a big thing for you, for anybody out there investing, whether it's in Indy or anywhere else. Definitely recommend you invest in Indy, but no matter where you're.
I mean, I do too. Hello.
Yeah.
Or don't, Wade.
I do. As we wrap up here, just one last thing. Do you have any other just kind of like maybe just tips or advice for anybody that's investing, whether they're a new investor or maybe an out-of-state investor that's looking here in Indianapolis?
Yeah, I think there's like, it comes down to success comes down to two things. It's knowing the area and investing strategy. I talk to a lot of people these days, and a lot of them don't really dive into what it means and the risks, like, of potentially, and the pros and cons of like buying single family versus multifamily versus X area versus Y area, like 30 miles outside of town. Like, understand what your decisions, the mechanics of what your decisions will involve, and how that will look on a day-to-day basis as you try to rent this property, as you try to operate it. The other thing is to really take your time and vet your people carefully. There's anytime there's money involved, there are a lot of shady characters, so like the people that I work with, like, I consider them family. Like, my lender, I will text at midnight. My HVAC guy, I have texted at 2 a.m, panicking, and they are totally okay with it. Like, they're like legitimately good people, and
That's on your team right there. So
yeah. So like, I think finding the right people is really what's going to like also make a huge difference in whether you end up being successful or not.
Awesome stuff. Awesome stuff. I love it. So thank you so much for joining me. I really appreciate that. If you want to know more about Sunitha, or just want to find out more about her story, or just have any questions for her, definitely find her on social media. She's on there. Reach out to us at simplewholesaling.com, or myself, Brian Snyder, or Brett Snodgrass. We'd love to help you out in any way we can. But that's a wrap for another Indie Investor Pod. Thanks a lot, Sunitha.
Thank you.